Evening, guys. You're welcome to tonight's market analysis. I hope you have a wonderful weekend. So, if there's
Good evening.
anything you want us, if there's anything you want us to analyze, please let me know that we'll look at it together. Where are you concentrating this coming week? Evans, Jeremiah,
Okay.
which pair are you concentrating this week? Evans, which pair are you considering trading?
A minute, sorry, I'll join you. Just a minute.
Okay, so let me start with gold. I wouldn't be trading gold this week. I think gold is very, very volatile, and the risk on gold this past few days after this massive bullish move on gold, the risk
Okay.
has been very high. I've been avoiding gold. Like last Friday, I saw this opportunity to sell. But when I calculated the risk was up to like 100 or 100 and something pips from my entry. So I just avoided gold because I don't like taking risks above 50 pips. So I avoid gold and most on USD pairs. So you can see after the formation of this bearish candle, now let's go to 1 hour. Let's start from 4 hours. So after the close of this bearish candle, I would have entered sell even before the close of this bearish candle, going to 1 hour because this bullish candle closed at a resistance level. Okay, this is a resistance level. So after the close of this bullish candle on 4 hour, I would have gone down to see the candlestick formation on 1 hour. So if I go to 1 hour, what do we have after the close? You can see we had a doji after the close of that candle on 4 hour time frame. We had a doji which indicates changing trend. So what I would have done here is to wait for the next candle, right? You know, I will take candlestick formation. We don't just jump in because we see a doji. We have to wait for the next candle to close bearish before we sell, right? Now, after the close of the bearish candle, we want to be sure that that level where we have the doji and the bearish candle has acted as a previous resistance in the past. So that would have been the reason for me to sell gold. Okay. And if I'm selling gold, my stop loss, I think I would have made some good profits. I've entered sell here. My stop loss would have been at this level. And I don't think price got to that level. My stop loss would have been at this level or the high of this candle. This would be my invalidation price. Anything that makes price break this high, then there's a probability that the price of gold will keep going up. So my stop loss would have been at this level. This is about 64 pips. But like I told you, I don't like risking above 40 or 50 pips. Okay, so my stop loss would have been around this level. If I had used 50 pips, they still wouldn't have hit my stop loss. Okay, but I was just too scared. You know, the volatility on gold it's been crazy for the past few days. So I avoided gold. So at the moment, as you can see, it's obvious we cannot buy gold, right? It is bearish at the moment. But if you look at how, let's go to 4 hour, or let's start with the weekly. Remember, if you're always analyzing the market before the market open for the week, you start with the weekly time frame to know the trend for the week, then look for entries on 4 hour or 1 hour time frame. Okay. So if you look at the weekly time frame here, we had a bearish candle and last week candle closed as a spinning bottom, right? Now, if we identify this resistance that was formed after the close of last week candle, if you go back here, you can see we had some resistance or support, right? Resistance on support at this level. We also had a previous resistance here, which has become a support, you can see. So there's a probability for price to pull back to a fair value gap. You know, the market will always go for inefficiency in the market, right? And fair value gap is one of the inefficiency in the market, right? So it's either it will go for inefficiency or go for liquidity. Okay. So as you can see, if you go to daily, You can see where price started dropping, or you see that clearly on 4 hour. See where price started dropping. This is where one would have entered sell on gold. So me, it won't be reasonable for one to enter sell at the current market price, right? It won't be reasonable. One would have entered sell at this point or after this pullback, even entering a sell after this ranging market would have been at a very high risk, because where would you want to set your stop loss? You want to set your stop loss using the highs of this candle or this high. That is where you set your stop loss, and if you calculate the risk there, the risk will be very, very high. Okay. So I think gold is still bearish. Gold is still bearish. Okay. So before I would sell gold, this is 4 hour. Before I would sell gold, this last bearish move on gold. Now, this was the previous range, right? This bullish move was the previous range on gold. If we apply Fibonacci from this swing high to this, from the swing low to the swing high, price is still at premium, right? Price is supposed to come down to discount. You can see we have liquidity void here. This void needs to be filled. This void needs to be filled. So price is expected to pull back to discount, which will be below 50 before it starts. You can look for buy opportunity, right? You can look for buy at the current market price. Okay, but there's still possibility for price to pull back, because after this bearish move, we have, if we go to lower time frame, now, we have a resistance here. This is a resistance. And there was a strong bearish move from that resistance. There was a strong rejection from that resistance. So if we go to 1 hour, let's go to 1 hour. So for me to sell, now this is where price started dropping on 1 hour. If I didn't enter after the formation of this doji bearish candle, why would I want to sell at this price? Right? I've already missed this move. So entering at this price is at a higher risk. So what would I do in this case? I would wait for price to pull back to discount on 1 hour time frame. So I would apply Fibonacci on 1 hour from this swing high to swing low. So I want to see price pull back to premium level. This is where I will consider selling. This is where I will consider selling gold. Price should pull back. I don't want to sell from this current market price. If I'm selling from this current market price, I'll be taking a high risk. So I could take advantage of the pullback, right? Since I'm expecting price to pull back to premium before I sell, I will look for a good setup to buy gold. Like we have it here, this is an hammer, right? The next candle has closed as an inverted hammer, but these two candles are bearish candles. Remember, we can't jump in and start buying when we are seeing bearish candles. When it is bearish candle that is forming on the chart, we want to be sure that we have buyers in the market before we jump in and buy. So, like, look at this next candle, the last 1 hour candle. It closes as an inverted hammer, right? But the body is not too strong, not too big, right? So I wouldn't be considering jumping in. I want to see how price moves on Monday, or probably wait for the close of Monday candle before I would decide on what to do on gold. So I'll be looking for buy opportunity. Probably if a candle closes above the high of this inverted hammer, that would be a good confirmation for buy. Okay, so that's what I'll be looking out for. The candle closing above this high, that is what I will consider buying. And if I'm buying, I'll aim for my TP will be around this zone. Probably maybe my first TP could be at this resistance level. Okay, these are areas of the high of this candle. Okay, and these highs, these are areas of liquidity. So they want to hunt for stop losses. There are stop losses at this level. There are sell orders, sell stop, buy limit, no, sell limit orders. We have sell limit orders at these levels. Okay, we want to hunt for these levels before pushing price down. So that's my take on gold. I'm bearish on gold this week, but I want to see price pull back into a premium level before selling. So is there anything you want us to look at?
Yes.
Okay, which
GU.
pair?
GU and
GU.
EU.
Okay, GU and EU. Okay. G and E. So G. Okay. So what do we have on G? Just looking at the chart, it's obvious, right? You can see the trend on G. So let's start with the weekly time frame. So last week, candle tested, you can see, tested the resistance, right? Tested the resistance. If you go back here, you see that we had a resistance too at this level, right? We had a resistance here. So market tested that resistance level. If you go back here also, you will see that we had a resistance at this level, right? You can see that. So there is a high probability that GBP USD will drop this week. I'm looking for sell opportunity on GBP USD. I'm looking for sell opportunity on GBP USD. Okay, so we had this candlestick formation last week. So we go down to lower time frame. Let's go to daily. What do we have on daily after the close of last week candle? You can see what we have here, right? This is a strong bearish candle on Friday. And we are the areas of liquidity of this daily time frame. This equal high, okay, there are a lot of stop losses at this level. And we also have uh, stop losses at this level. So it's either price hunts for these levels or hunts for these levels. But with what we have, this is a bearish pattern. So price will be aiming for this um, liquidity. Okay, so let's go down to 4 hour. What do we have on 4 hour? So you can see that GE has already started its bearish move. Bearish move has commenced on GE. So because what we have here, price range, and after the ranging market, there was an engulfing candle. So we had an engulfing pattern here, right? And you can see we had a resistance here. We also have a resistance at this level. Okay.
Yeah.
So if you're considering selling, I would suggest you wait for pullback. You don't want to sell at this price, right? This is where price started
Yeah.
dropping. Why would you want to sell at this price? Price has already moved over, I think it has done over this point to this point. It has done over 100 pips. You don't want to take 100 pip risk, right? That's too high. So you wait for price to pull back. A lot of people will jump into this trade and start selling, due to FOMO, fear of missing out. Okay, so patience is a virtue in this game, right? You have to be very patient. You have to be very patient. So apply your Fibonacci, take it from the swing high to the swing low. Keep it
Okay.
simple. Take it from the swing high to swing low. Price is at discount now, right? We want to see price pull back to premium before we sell. And
All right.
remember, when price gets to premium, you want to see there has to be a bearish reversal pattern at that premium zone for you to sell. You don't just jump in and start selling because price is now, or the market is not trading at the premium level. No, you need to wait for a bearish reversal pattern to form at a premium level before you sell. And if you are considering buying, you need to wait for a bullish reversal pattern at a discount before you buy. Hope you get that. So if you work with the previous range, this would be the previous range, right? From this swing low, right,
Yes.
to this swing high. This would be the previous range. So price is currently trading at premium, right? Price is at premium. So we want to see price pull back to discount, right? We want to see price drop to discount level, right? But before price would pull back to premium, we first, fill the inefficiency, fair value gap at the premium zone or premium level. You get what I'm saying? So here on premium level, we have a fair value gap here. So there's a high probability that price will pull back into this gap to fill this gap before it starts dropping. We have a fair value gap here. We have a fair value gap here too, right? I hope you know how to identify fair value gap, right? You know how to identify fair value gap, right? Evans, are you still in the class?
Yes,
Are
I'm
you still
here.
in the class? Okay, so you know how to identify fair value gaps, right?
Yes, sir.
Okay, so we have, this is a fair value gap, and also we have a fair value gap here, right? This is also a fair value gap. So this gap should be filled. So you could consider selling at this zone, depending on the candlestick formation at this zone or this zone. For example, if I want to jump in and start selling now, if I want to jump in and start selling, my stop loss will be above these zones because I know there's a high probability that they will push price back into the zone before it crashes. Okay, so let's calculate the risk.
So wait for
Let's
wait
calculate
for
the risk.
reversal,
If I'm
right?
to take what? What did you say? Hello, hello. So I'm setting price to fill these gaps. Now, if I'm to take this trade from the current market price now, my stop loss will be above this level, which is about close to 98 pips, and I don't take such risk. Anything above 40, 50 pips, I skip those kind of trades. Okay, so this is too high for me. That's why I have no choice than to wait the price to pull back into this zone. The price pulls back into this zone. Okay, it pulls back into this zone, and I see a sell opportunity. Let's see the risk involved here. Okay, this is cool. If I set my stop loss few pips above this level, that'll be about 50 pips or 40 pips risk. It is still very okay, right? Still very okay. So that's my take on GBP USD. I'm bearish on GBP USD this week. Bearish on GBP USD this week. And this is the area or zone I'm considering selling GBP USD. Okay. So the next pair is Euro USD. Euro USD. That is going to be the last pair for this section. Euro USD. What do we have on Euro USD? So I believe you got my take on GBP USD. I'm bearish on GBP USD this week. Okay, I'm bearish on GBP USD this week. So let's look at which pair, Euro USD. Okay, said Euro USD, Euro USD. Let's work with the trend charts. So as you know, GBP USD, Euro USD are positively correlated. You can see the pattern we have on Euro USD is similar to what we have on GBP USD. So my bias on similar pattern. My bias on G on B is bearish. Okay, so I will be looking for sell opportunities on G this week. Okay, so Mr. Evans, I believe you can hear me. So you can see the same pattern on GU. Sorry, on EU. You can see, look at GU. This is weekly time frame. Let's go back to GU. See the setup on GU. Same pattern. You can see same pattern on GU. Okay, same pattern. You can see what we have on EU. So my bias on EU is bearish. We have our resistance here. Go back here, it was a resistance, right? We also had a resistance here, and the market tested its resistance. You can see that, okay, and there was a strong rejection on that resistance level. Okay, so let's go down to daily. We should have a strong bearish pattern on daily for us to look for sell. Okay, so you can see here we have this is a strong bearish candlestick. Okay, this could be called a Marubuzu, and the Marubuzu indicates changing trend from bullish to bearish. This is a bearish Marubuzu. We have bearish Marubuzu and we have bullish Marubuzu. Now, a valid Marubuzu is not supposed to have a wick above it. Yeah, a valid Marubuzu is not supposed to have a wick above it. But these days, it's very difficult to find a candlestick without a wick above it and a wick below it. So you have to use your discretion. So this is a Marubuzu, okay, because it has a small wick below it and a very small wick above it. This is a strong bearish candlestick, which indicates that during this session, the bears overpowered the bulls. This indicates that supply exceeded demand. Okay, so it indicates we have more bears in the market. Okay, so this is a strong indication that there's a probability that Euro USD will be bearish this week. We had a resistance here. If this resistance is broken, price can keep going up. Okay, so we should be looking for sell opportunity. So price side dropping from this point, and it's currently trading at this price. So should we jump in and start selling? It will make no sense. That would be an uh, unreasonable investment. That would be unwise, right? So enter sell at this price. Okay, when it was selling for 1,000, you didn't buy. Let's say 1,000 USD. Why would you want to buy at 5,000 when you would have bought at 1,000? Why would you buy at 5,000? Makes no sense. So we need to see price pull back into a fair value gap or into a premium zone, in premium level before we consider selling. Okay, so let's go to 4 hour. We could apply the Fibonacci of 4 hour time frame, okay, or 1 hour time frame. So let's take it from the swing high to the swing low. Okay, this is this swing low. Okay, so you could see here we had a support too, which I think is the reason for this rejection, this support level. Okay, we also had a resistance there, which has become a support. So this could be the reason for the rejection. Okay, this could be the reason for rejection, and there's a possibility, like I said, for price to pull back into a premium zone, a premium level. So there's a fair value gap here. So we should expect price to fill this gap. We should expect price to fill this gap. So if this gap gets filled, we could look for sell opportunity around the zone. And if you are selling, we could TP could be at this level. That will be my first TP. Selling from this point, my first TP. Okay, my first TP will be at this low. Okay, second TP will be at this level. That's my take on Euro USD. I am bearish on Euro USD this week. Bearish on GU, bearish on gold, and bearish on the I'm also bearish on Australian dollar USD, positively correlated with GBP USD and EU. And on USD card, I am bullish. On USD CHF, I am bullish. On JPY pairs, I am bullish on JPY pairs. So let's just look at USD card before we end tonight's search. Let's look at USD card. Okay, so let's start with the weekly. So what do we have on the weekly? Okay. So what we have on the weekly, price is currently trading at this point. Let's apply a horizontal line. Is this level is support in the past? Did it support? Yes, we had support close to that level, right? This was the support. Market tested that level. We also had a support here. Can you see? So that's the reason for that pullback. This support is the reason for the pullback. Okay. So last week I had it close strongly bearish. Okay, strongly bearish. And we apply Fibonacci on the previous range, which would be from this swing high, swing low to this swing high. You would see the market has already done 100% retracement, right? From this point, this is an 100% retracement, right? So there's a probability for price to pull back into premium before it starts dropping. Okay, so I'm looking for buy opportunity. This is a strong bearish candle at a discount zone, but we can't jump in and start buying, right? Not a strong bullish reversal pattern. It's not a strong or a valid bullish reversal pattern. So not jumping. Okay. The fact that last week candle broke this support and also broke this support indicates that the bears are still dominating, right? The bears have overpowered the bull. This indicates that we have more supply than demand. This was a demand level, supply increased and closed below this demand. This indicates supply has exceeded demand. And when supply exceeds demand, that is expected to keep dropping. So if you're considering buying, you have to wait for a bullish reversal pattern, a valid bullish reversal pattern before you buy. This is a bearish setup going by how the last week candle closed. This is a bearish setup, okay? But because it has done 100% of this previous range, that is why we are looking for buy opportunity. And you can see we had several support levels. That level has acted as a support in the past. So let's go down to daily. What do we have on daily? So on daily, you can see we have what looks like a hammer, though not a valid hammer. This is a bearish hammer, not a valid hammer. Okay. So before we buy, we need to wait for the next candle, which will be Monday candle, right? To close bullish. If Monday candle closes bullish, that will be the right time to skip buy. That will be the right time to skip buy. And if you don't want to wait for the Monday candle to close before you skip buy, let's go to 4 hour. What do we have for 4 hour after the close of this candle on daily? So you can see what we have on 4 hour. Okay, still not a valid bullish reversal pattern. Still not a valid bullish reversal pattern. So if I want to buy without waiting for the close of the 4 hour, the daily candle, what I need to do is wait for price to break this high, right? This is the most recent resistance on 4 hour time frame. And like I told you in previous classes, um, resistance levels on 4 hour daily and weekly and monthly time frame are more valid or stronger than resistance levels on lower time frame like 1 hour, 15 minutes, 30 minutes, 5 minutes, or 1 minute time. Okay, so I work with resistance from 4 hour time frame and above. Okay, so let's go to 1 hour. Let's just see what we have on 1 hour. Okay, so on 1 hour we have this is an hammer, right? This is a valid bullish reversal pattern. This is an hammer, and we have several candles that stop after it. The fact that they could not break the low of this hammer is an indication that the bulls are showing up in the market, and there's a probability for price to keep going up. There's a probability for price to go up. Okay. So as you can see, we had a range. This was a ranging market from this point to this point. Neither the buyers nor the bulls had the upper hand, right, from this point. So this is a ranging market. So we need to wait for a breakout from this range before we buy. And like I say, I would be considering buying at this level. The candle 1 hour or 4 hour closes below above this level, I would buy. And this could happen before the daily candle closes. It could happen before the daily candle closes. Okay, so that's my take on USD CAD. Any question before I end this session? Do you have any question? Or you have anything you want us to look at? Let me know before we end this session. Mr. Evans, can you hear me? Do you have any question? Any pair you want us to analyze? Okay, Australian USD GBP. I've said, given my bias on Australian USD bearish. Okay, my bias on Australian USD is bearish. Let's just look at the charts weekly. Okay, you can see what we have here. This is daily. Let's go to the weekly. So last week candle closed bullish, closed above this resistance, right? What they actually did last week was to hunt for stop losses at this high, and I think they've achieved that last week. Okay, they've achieved stop losses at this level. Okay, so resistance level. Now, a lot of retail traders will jump in. They will see this as a valid breakout. And that's what they are being taught, right? Most of the books you read out there about resistance, breakout, and breakout and support, they tell you when the body of the candle closes above the resistance level, it's a value breaker. So a lot of retail traders will jump in and start buying, right? So we had a support here too. You can go back there to the support. So I feel also like USD said, if we also apply Fibonacci, this was the previous range, right? This was the previous range. If you apply Fibonacci from this swing high to this swing low, you would see that price is currently, the market is trading at premium, right? You can see that it's above level 50. So market is trading at premium. Let's just even apply, let me just apply an indicator. And this is weekly. Let's apply stochastic. Let's see what we have on stochastic charts. Stochastic is used to identify overbought and oversold. Okay, just by looking at the chart, I can tell that the market is overbought. Just by looking at the body of the candles, you can tell that the market is overbought. Okay, but let's just apply stochastic indicator. Let's see. So you can see on the weekly, you can see stochastic indicator is overbought. Is at overbought level. You can see that it's overbought. That's what we have on daily. Daily also is overbought. Can you see that? It's been at that level for some time. Okay, it's overbought. Let's see what we have on 4 hour. Okay, 4 hour is approaching oversold level. Okay, so I want to see 4 hour pull back into overbought, then we sell. Okay, either 4 hour or 1 hour. 1 hour should be at oversold now. So you can see the pushing oversold level. So we might want to see price pull back. This indicator of stochastic, we want to see it pull back to overbought or 4 hour pull back to overbought before we sell. Okay, so that's my take on. You can see the information we have here on 1 hour. It's been forming, the price has been in a range for some time. It has been in a range, it was in a range at this point. From this point, price was in a range from this point to this point. Yeah, it was in a range. And there was a strong breakout, right? There was a strong breakout from that range. And after a breakout like this, or after an impulse move like this, price is expected to pull back, right? To fill the fair value gap, right? So I think that was the essence of this move. So I think they've accomplished that. So we should be looking for sell opportunity, probably below this level. We wait for price to break this level before we consider selling. Okay, consider selling on $200. Yes, I hope that is clear. I hope that is clear. Then last day, you said GDP, let's look at what will happen. GDP, let's use the plain charts. Okay, do my analysis without indicators. Okay, sometimes when I'm taking classes like this, I use indicators so that the beginner traders could understand the concepts of overbought and oversold. Okay, so let's see. Let's start with the weekly. What do we have here? It looks like a bearish setup, right? Looks like a bearish setup. Let's look at the structure here. The structure on this chart is a bullish structure, right? It's been forming series of uh, higher high, higher low, right? Higher high, higher low. And I think the last higher low was this, right? This or this. So these lows need to be clear for us to say the structure has changed, that there is a shift in market structure. These lows need to be clear. So you can see market tested that low and there was a strong rejection from that low. That's why I said I'm bullish on GBP JPY. Okay, I'm bullish on JPY first this week. Okay, if you also apply Fibonacci, you can either take it from this swing low to this swing high, or take it from this swing low to this swing high. If you apply your Fibonacci from this swing low to this swing high, this is like 100% retracement, right? This is like 100% retracement. And if you take it from this swing low to this swing high, it should be around 78 to 80% retracement. And that is where you look for opportunities to buy, right? That's really for opportunity to buy. Since the structure has not been broken, since there's no shift in market structure, the trend or the structure is still bullish, right? It is still bullish. So we have a bearish candle. Even if you want to sell, you cannot sell at the current market price. It doesn't make sense, right? That wouldn't be a good investment. If price started dropping from this point, you didn't sell from this point, why would you want to sell at this price? Right? Doesn't make sense. So apply your Fibonacci. Let's work with this from this swing low to this swing high. You want to see price pull back. There is a what's it called? There is an inefficiency at this level. If you go down to lower time frame, let's go to 4 hour to identify the or daily to identify the inefficiency at premium. So here we have a fair gap here. Let's go to 4 hour. Let's go to 4 hour. So that will be my target. Buying let's go to 4 hour. So I'm buying GP. My target to be switch to 4 hour. Okay, so we have a fair value gap here. This will be my target. My TP is around this level. Maybe my second TP. Okay. My first TP is around 1.5. That's my risk reward. That's my target for first TP. So if I'm risking 40, 50 pips, my first target will be around 75, 80 pips. Okay. 75, 80 pips. So this is where aiming at. Okay. So you can see what we have here. Even if we work with 4 hour, you can see from this point to this point, retracement to this level. What they did there was to clear liquidity. Stop losses at this level, these lows, and they have achieved that. So price went up, right? This is an impulse move. After an impulse move, wait for a retracement to discount before you buy. And that was what played out last Friday. So after this bullish move, you apply Fibonacci on these. You want to see price pull back, right? Let it pull back to premium. So I'm still expecting price to drop, okay, to fill the inefficiency. That's a sell side inefficiency, right? So which will be, if you go to 1 hour, let's go to 1 hour. So we go to 1 hour, we have a fair value gap here. Let's go to 15 minutes, okay? Let's see what we have on 15 minutes. Okay. So at 15 minutes, we have a fair value gap here. So I want to see price fill this gap before I will consider buying. That if there is a very valid, a good bullish reversal pattern. You can see this candle already filled this gap, right? Fill this gap. I think it's still coming back to fill the gap before it's pushed up. And that's because this was Friday. If this was on Tuesday, Wednesday, Thursday, there's a problem that price would have moved up from this point, because you know how price action on Friday most times is very erratic, very unpredictable. Okay, so let's see what comes at this level for us to buy GJ. Okay, so that'll be all for tonight's session. I appreciate you all for participating in this session. Remember, this is the month of December. A lot of the institutions are going on break, so there won't be much liquidity, or let me say, the volatility in the market this week will be very, very low. So you should be conservative if you're trading this week. Be very conservative. Reduce your risk. Don't over leverage. This is not the time to over leverage. This is not the time to be reckless. You have to be very, very conservative. Okay? Fully by Wednesday. I think my last trade for this year will be on Wednesday. On Wednesday or Thursday. That will be when I'll close for this year. Okay? So I wish you all um a wonderful celebration, wonderful holiday. Okay? Ensure that you review your performance for the year. You need to prepare for the new year. You need to plan for the new year. You want to achieve better results next year. You need to ensure that you do your past. You want to surpass what you achieved this year, next year. That should be your goal. Okay, so ensure that you do a review, and Identify the areas that you made mistakes this year, okay, area that you need to work on. Identify those areas and fix them. Don't just party this period. This is not the time to party. It's time to review your performance and see how you can improve on it next year. Okay? Do have a wonderful night.